as multifamily has become extremely attractive over the last handful of years. I mean, it's always been an attractive asset, but there's been a flood of interest in the multifamily space over the last 5 years. It's becoming more and more difficult to find good opportunities that pencil. And so you start to see this transition of everybody in multifamily, it's the darling of the industry, to then branching out slightly and starting to look at different asset types that can produce better yield. One of those obviously being self-storage. There's opportunity in self-storage, mobile home parks. Talk to us a little bit about someone who is less familiar with self-storage, is familiar with multifamily as you were. What are some of the pros and cons of investing in self-storage versus multifamily? I know you already rattled off a few earlier about the ease of management, the eviction process, being able to raise rents incrementally that doesn't have quite as big of an impact. Is there anything else that you would add to that list that would say, you know what, this is why I really like self-storage? And then I would like to hear the challenges that you face in self-storage as well.
I think too, on the self-storage side, you'd have some of the financing options. So if you have somebody listening who wants to maybe buy their own self-storage facility, you can do that using SBA financing. So basically it's government-backed financing. Live Oak Bank is a great bank to talk to about that, but you can get a loan from the Small Business Administration and possibly purchase your own facility with as little as maybe 10 to 15% down. So you can be owning 400 plus units in storage pretty quickly, depending on how much capital you have. And then the other side of it too is just the recession resistance. So on the multifamily side, it's actually easy sort of tell in multifamily. Everybody needs a place to live, whether it's a recession or whether times are good, right? So it's a pretty easy story to tell, and people are familiar with the operations. And everybody lives in a house. You know, if you live in a house, you kind of get it, right? Okay, it's one house, but if I got like 300 units, okay, I understand that scale, economies of scale, et cetera. Whereas in storage, it's like, well, it's kind of a head scratcher. One is the recession resistance. So before I get to that, storage, sometimes people have a hard time understanding why in the world do people want to store their stuff in a place, in a garage, essentially? Like, why don't you just get rid of it? And it's like that. It's kind of hard for people to wrap their heads around. And it's true. Usually people need storage when there's a time of change in their life. So you think of they call it like the 4Ds: death, divorce, dislocation, meaning you're moving, downsizing, maybe you're downsizing your space or whatever. Now they added a fifth D called decluttering. During the pandemic, people needed to make space for work from home situations. So you have those driving factors, which don't change too often, and in fact can change even more during recessions or downturns. So to get back into the recession situation, the returns during those periods, if you download, I've talked about this in numerous places, but if you download the data, anybody listening here can go to REIT.com. You go download the data for all of the returns from every asset class, publicly traded REITs, going back to like 1990, whatever. And you can do your own little analysis and look and see in 2008 and 2009, which asset class had the best returns during the pandemic in 2020, which asset classes had the best returns. You will always see storage there at the top, if not leading the pack in returns. So as far as risk, if investors are thinking about risk and return trade-off, right? So in other words, the more return you have, there has to be some sort of inherent risk there. Self-storage is a really good risk-adjusted return when you look at it. And why is that? Well, it's because of the operations and the need. What is driving storage are those 5Ds, where people have some sort of change in their life causing them to need storage. You add that to the fact that when somebody moves into a unit, typically they plan on staying for 2 months, but then they end up staying for 6 or 9. About half or 3/4 of your tenant base will end up staying much longer than expected, usually up to anywhere from 6 to 9 to 12 months or more, despite those rental rate increases, because they are so small. It's the cost of a latte. But that $5 increase could be a 5% increase in my pro forma, so which is really good. So those are the reasons. Hopefully that makes sense. It's not just us getting on and saying, hey, storage is great, right? It's like asking a barber, do you need a haircut? They're always going to say, yeah, you need a trim on the side, right? But anybody, third party, just go out there and look, download the data, do your own analysis, and you'll see that self-storage performs very, very well. And again, disclaimer, past performance is not an indicator of future performance, right? And those are all publicly traded REITs, but at least you can get an idea for the performance of self-storage.